Okay, so in this video, I'm going to be talking about a big issue that I see with many traders that get into this business, something that I see holding a lot of people back. And that issue is unrealistic expectations. So, unrealistic expectations when you get into this business. Okay. And there's a reason for that. Usually, when you jump into it, when you first get introduced to trading, when you're first getting into the business, it's usually you get exposed to individuals who may not have your best interest in mind. And because truth is, the truth doesn't sell. The truth doesn't sell. It doesn't sell those courses. It doesn't sell those subscription fees. It doesn't pay to be truthful. So that's why a lot of the gurus, they sell that dream. They whisper those sweet nothings in your ear. You can make, we've all heard the sales pitches or the dream that they sold. You can make 100% week in, week out, month in, month out, day in, day out. You get the gist, right? So that's the typical message that you'll see, the typical BS that's spread across social media and by these false educators. And it's a very damaging message. Okay. It holds a lot of people back because a lot of beginners, they get brainwashed by that message, right? They get brainwashed by that message. And what'll happen is when they go into real trading, and they learn that that isn't the reality of this business, that they're not going to hit 100% gain day in, day out, month in, month out, week in, week out. It's just not going to happen. That's when it starts to mess with their head. That's how we get into, or a lot of people, that's how they get into strategy hopping, always looking for that holy grail, always looking for that next shiny thing, that next thing that's going to change everything for them, and it doesn't exist. And a lot of it comes down to, well, there's because we're all different, we're not all the same, but for a lot of people, it's because of their expectations. They come into it with expectations that aren't grounded. Okay, and people, they'll try to tell you that you're thinking small, that you're not thinking big enough but you can't force the market to do anything it wants to do. The market's going to do what it wants to do. If you're in a slow market for your strategy, which happens for every single strategy, doesn't matter how good the strategy is, there are slow periods. Okay. So since we've talked about unrealistic expectations, what's a good target? I don't personally go into the market and say, hey, I need to shoot for a certain percent gain every month. Like, for example, some people do it, and if it works for you, great, keep doing it. But for me personally, that didn't work for me because I was just too focused on trading the percent gain and not the chart that was in front of me. But some people, they'll go into the market and say, hey, I need to shoot for 3%, 6%, 5%, 20%, 100%. On an average, what's an average gain per month that is a good gain, but is also very achievable. That's very grounded in reality as well. 6% a month. That 6% a month is a fantastic return. It's a killer return, and it's very doable once you have the proper skills. Once you have a firm understanding of risk management, you have good psychology, or you get your psychology under control. 6% on average is a good number. Okay, because remember, 6% a month compounded, so you're compounding profits every single month. 6% a month with profits compounded every single month on a rolling 12-month period is 100% gain on your account. It's 100% gain on your account. Okay, that's an amazing return, out of this world return, and it's very doable. Okay, so, and even 3%, I mean, even 3%, 4%, that's a good return as well. Okay, when you compound those profits, you do it month after month, those profits, they start to add up very, very, very quickly. Okay, and I know a lot of you are still gonna roll your nose at this because a lot of people that are watching this right now, you don't really have big accounts. You might have a couple $1,000. You might have a couple $100. So I understand that, 6%, that just doesn't sound very attractive to you. And that's how a lot of the people, they get sucked into those sales pitches. They get sucked into to the con artists that they're introduced to when they first get into trading, is because they know a lot of you have small accounts. They know the message of 6% it's not attractive to you because you don't have a big account. And if you're thinking to yourself, 6% a month, okay, even if I was to double my account every single month, it's going to take me a long, long time to grow that account, right? So, like, say for example, you got $1,000 after a year, that's just 2,000, and then next year, so you do the same thing, that's 4,000, then 8,000. See, it's I can understand the mindset that, hey, it takes a while, but good for you. This is absolutely the best time ever absolutely the best time ever to be a trader. And it's because we have something called prop firms now. Okay, I am not affiliated with any prop firms. They're not paying me to say this, but it's the truth. Have really, really given opportunities to those who lack capital, to beginner traders who lack capital. And if you have the skills, if you have the psychology, all that stuff down pat, you can rack up profits very, very, very quickly through these prop firms. Okay, so just think for a second. So say you pay for a prop firm account, right? Say you pay, you get through the evaluation, you've been tested, you got the account at this point, right? And say it's 100 grand that you're trading with. Think if you were to make 6% on 100 grand, you might pay like what, 800, $1,000 to get that account. And then once you got the account, you're averaging, just a rough average, so you're rough averaging 6% a month. All right, that's 6 grand. That's 6 grand. 6 grand, boom. 6 grand, boom. All right, maybe next month you make 5 grand, boom. Maybe the next month you make 4 grand, boom. And then the next maybe 8 grand, you do a little bit better, boom. That's gonna add up, okay? And remember, you didn't pay much money to get that account, and all those profits that you incur, that you get from that prop account, if you're a smart individual, those profits, they should be funneled into your personal account, okay? Because truth is, we don't know if these prop firms are going to be around forever. We don't know if they're going to be around forever. Nobody knows. If anybody says that they know for sure, they're full of crap. Nobody knows if prop firms are going to be around. These online prop firms are going to be around for years to come. They could be. I think they're here to stay, personally, but I could be wrong. So you got to keep that in mind. That's why you should use those profits that you get from your prop account, funnel them into your personal account. That's how you need to do it. Okay. Now think about it. You're trading your personal account, you're compounding money every month, but now you also have your prop account on the side where you're getting profits from, and you're funneling all these profits into your personal account. You see how quickly it can start to add up? Because I mean, you're compounding your personal account, but you're also consistently adding profits from the prop account. So if you're adding like, a few thousand every single month to your personal account from your prop account, I mean, at this point, you're growing your account twice as fast, 3 times as fast through the power of compounding. Okay, it doesn't take long now, because prop firms have really, really changed the game in terms of how fast you can grow your account now, your personal accounts. It's really changed the game. Okay, so I really want to get you. The purpose of this video is to get you out of the mindset that you need to absolutely slam it out of the park every single month. Sure, some months you may do better than others. That happens. Like for example, during like 2020, around that time, like when COVID was just popping off, the small cap penny stock market was just going crazy. There was insane opportunities. I mean, it was easy money. It was insanely easy money. During that time, I was averaging well over 6% a month. All right, I was killing it. I mean, we're talking 6% in a day. Like, but that was a very like easy market condition. Okay, it's not the norm, is what I'm getting at. So there's going to be certain periods where your strategy, it performs better. Okay, there's going to be certain markets, certain times of the year where you may get above average returns, like above 6%. You might hit 10%. Hell, some months you might hit 20% or more. That happens in a hot market, and where your strategy is performing well. But on average, I would say 6% a month is a good number to land at. That's what I personally do, is 6% a month. 5 to 6% a month. That's what I personally do. And you can get filthy rich on that amount, on that return. Filthy rich. Okay, there's because remember, there is no salary cap with trading. There is no limit. There's no limit on how far you can scale this up. Okay, you can get filthy rich on 6%. What's 6% on a million? That's 60 grand. All right, so I mean, it's really just a matter of compounding, scaling up capital. Okay, doing that consistently, month after month, compounding profits in your personal account, consistently taking the profit that you make from your prop firm account, plugging it in your personal account, and then just repeating that process. Get funded if you can with as many prop firms as you can. Okay, the more capital that you got coming in, the better, and then funnel all of those profits into your personal account. And think, if you're funded with multiple prop firms, like on a consistent basis, withdrawing profits, remember you're just hitting, usually averaging 3 to 6% a month, but you're funded with multiple prop firms with access to thousands of dollars in capital, and you're consistently plugging this capital in your personal account, consistently compounding your personal account month after month after month. That account, if you got the skills, that account's gonna grow quick. And it ain't gonna take you long to get to some serious capital that you're trading with. And it's all done, and it can all be done through that low hanging fruit objective of like 3 to 6% a month. That's where you need to keep your head at. Okay. Get out of that garbage way of thinking that you have to hit 50, 100% a month gains. It's not going to happen on a consistent basis. Okay. And people that hit that are showing 100% gains on a month or doubling their count every month, there's either a couple scenarios happening here. They're taking wild, crazy risks to do so. That's just stupid. That's going to get you in trouble. That's going to get you blown up. That type of risk. Or they're faking it, which is a lot of people as well. They're faking results because, again, they got to sell those courses. They got to get those subscription fees. That's the reality of it. That's the cold hard truth of it. Okay. But again, that's the purpose of this video. I'm really trying to drive through your dome the importance of it, of having your expectations where they need to be. Okay. 3 to 6% a month. You can get rich off that, filthy rich off that. You can make a full-time living off that. And it doesn't have to take like 10 years of consistently growing your account to reach that goal that you have set in your mind. Okay. Again, prop firms, I'm not affiliated with them. They're not paying me to say this, but they have really leveled the playing field. Okay. Again, do your research, find the reputable ones, and that's what you do. That's if you want to grow your account quickly. Okay. And that's the best way to go about it. If you want to grow your account quickly, not by looking for these huge percent gains every single month, not by looking for that holy grail strategy that doesn't exist. Okay, if you're looking for that holy grail, you're going to die looking for that holy grail. It don't exist. Okay, find a strategy that fits you, that fits your personality. Consistently compound gains in your account, consistently withdraw profits from prop firms, and then just repeat that process month after month after month. Manage your risk, manage emotions, and it'll happen. All right, it will literally take you very little time to get some serious capital in your personal account if you do that, if you got the skills. Okay, so again, if you enjoyed this video, like, subscribe, keep it coming.